Is health insurance what's keeping you stuck at your desk instead of soaking up the sun on a beach in Tahiti for a month, or maybe wandering the streets of Italy as you sip on a cappuccino and savor a fresh baked pastry? And trust me, they're that good. But don't even get me started on the pizza and the pasta. Well, after this video, you're going to have to come up with a new excuse to keep on working, because I am about to clarify and simplify all of the options you have for health insurance if you want to retire. And trust me, there are many, even if you're not Medicare age. If you've just stumbled upon our channel, I'm Heather, and this is Paul. We're taking retirement on the road, the rails, and the waves. Welcome to the Freedom Strategy. You know, figuring out what to do about health insurance was truly one of the biggest hurdles that we faced when we decided we wanted to retire to go explore the world 2.5 years ago. It was a problem, and I had to fix it. So I dug deep to find a solution, and I found many, surprisingly, actually. Because honestly, the fear of not having health insurance should not keep you from chasing that retirement travel dream. It just really shouldn't. So I'm going to break it down into two categories. One is if you're pre-Medicare age, which is us, and the other is if you are Medicare age. And there were actually a couple of things that I found out on that Medicare side of things that were a surprise to me. So anyway, let's get to it. So if you're sitting there thinking, I would love to retire to travel the world, but I'm not Medicare age yet. Well, here are your solutions. The first is the ACA Marketplace, I don't even know what you call it anymore, solution. And boy, has that seen some changes this year, some expensive changes. So let's go through the options there. All right, I'm just going to call it marketplace insurance because I think that's a term most people are actually used to. Now, like I said, this year there were so many changes. And yes, those changes made it much more expensive for everybody. And there are all kinds of reasons for that I'm not going to get into in this video. But actually, the increase in price was for two reasons. One of those is many people lost the ability to get some type of subsidy for their insurance premiums. And then the other is actually just health insurance companies have increased their premium rates by like 20 to 30%. So those combined are why people right now are feeling the burn and saying, what the heck am I going to do? Because I cannot afford this. But lucky for you, I have a couple of hacks that actually can help. Now, there are two plans that most people focus on in the marketplace. One is the silver plan. Yes, there is a gold plan, but I'm not going to talk about that because not very many people use that. So one is the silver plan, and that is the one that most people rely on if they want this big full coverage insurance. And that is what has seen the largest increases in monthly premiums, really pricing it out of a lot of people's budget. The other that I'm going to talk about is the Bronze Plan, and that is the one that historically people have used if they really want a lower premium, but they don't anticipate a lot of health care. Now, you guys probably know this, but your premiums are mostly based on three different things: your age, your location, and then whether you smoke or not. So the premium for the Silver Plan, which again is the higher level of these two, is in today's world about $2,000 a month. Very, very steep. But the premium for the Bronze Plan is actually about $500 to $600. Now, again, these numbers will change depending on where you live and whether you smoke and what your age is, but that's just sort of an apples to apples comparison. So you understand why people now are saying, well, I can't afford the Silver Plan, but I might want to do the Bronze Plan, but I'm a little bit afraid that there are some things that it won't cover. But here is where I'm going to tell you two hacks that I have that actually could help you decide that the Bronze Plan, the cheaper plan, is actually the plan for you. Now, the first thing is there actually still are some subsidies available if you make less than 4 times the federal poverty level. And there's a lot of detail to that, but I will tell you in general, for a single person, that is roughly $62,000 a year. And for a couple, it is roughly $84,000 a year. Now, a lot of people make more than that, which is why they no longer qualify for those subsidies. But there is a way to push your bracket back down into that. So hack number one is to try to get that gross income down below that level. And no, I don't mean like go to your boss and say, okay, I want to make less money. What I mean is max out your 401k and max out your HSA card. Now, for those of you who don't know, the HSA card is a card that's associated with your high deductible insurance plan, and you can put money away in it, and it is tax-free money. And then you can pay for medical care, medical expenses, all kinds of things, anything medically associated with that card. So you're effectively paying with pre-tax dollars. So when you put money into your 401k, into an HSA, that reduces the amount of income you have. And it could be just that alone is enough to bring you below that threshold, and you will get the subsidies. Now, that would actually make it much easier to stay in the silver plan. But what if you can't do that? Okay, here's my second hack, and that is, again, fully load your HSA card as much as you can. As it stands today, I believe individuals can put in up to $4,400 per year pre-tax. And then if you're over 55, you can add another $1,000. So now you're talking $5,500 on your HSA card. So that $5,500 that is pre-tax dollars on your HSA card goes to pay for all kinds of healthcare or health insurance costs. And if you're in the 30 to 35% tax bracket, that will save you about $2,000 a year. Well, go back to the Bronze Plan. I already told you it's about $500 a month, kind of on average. So that $2,000 pays for 4 months of your health insurance. And it gets even better than that, because these plans, the marketplace plans, are not designed for international travel. So if that's your primary goal, I have a lot of other options for you. However, even this one can work, because that HSA card, that now you're buying the lower level bronze package, but you've got this fully loaded HSA card that's saving you $2,000 a year, that you can use to pay for medical care overseas, as long as what you're buying overseas is medically approved in the United States. So that is a caveat. You have to pay attention to it. You can't go get a whole bunch of experimental stuff and use your HSA card. It has to be medically approved in the United States. But you can use that fully loaded HSA card to pay for all kinds of medical stuff all over the world. So if you need to get some dental work in Mexico, or maybe you have a little visit to the ER in Tahiti, you can use a HSA card and pay for it. And it's tax-free. How about that? Yeah, that's a pretty good tip. So even though these plans are not designed for international coverage, there is a workaround to be able to use your pre-tax dollars and still use it to pay for out-of-the-country healthcare. And just in case I didn't say this earlier, that ability to get the Bronze Plan and still fully load your HSA card is a new change for 2026. So that is why it is a new hack that you all need to know about, and it didn't exist when we were making this decision, and it probably would have changed what we ultimately ended up doing. And we will get to that in just a minute. But let's move on to your next option, which is COBRA. Now, most of you know what COBRA is, so I'm not going to go into the details of all of that kind of stuff, but here's what I will tell you. It's expensive, and it's a temporary fix. So it might be good if you're in a transition from leaving your corporate job to having your new insurance in place. But other than that, I probably wouldn't go for COBRA. It truly is expensive, and there are better options out there. Now, if you really are serious about planning to retire, whether it's early, whether it's not, to travel the world, we do have a free PDF handout for you. It is the 12-month retirement roadmap. And each month it lays out an action step for you to help you get the ball rolling to finally get retired and get out there and enjoy the rest of your life. So click the link below. It's a free PDF. It'll go straight to your handbox. Now, the third option is private healthcare. And you can just go out and buy a Cigna plan or Blue Cross Blue Shield or whatever insurance you are the most comfortable with. You go through an extensive underwriting process, and they'll have all kinds of rules for that, but that will give you the most similar type of insurance that you're used to in your corporate job. Again, those are very expensive, and they do often have very, very strict limitations for international travel. So if you're going to go that route, please, please, please get a lot of clarity on what it will and won't cover for international travel. There are some other options for you, though, that might be even better. All right, number 4, international health insurance. This is what Paul and I do, although we are about to reevaluate the whole thing because we're coming up due for renewal and we may actually make some changes. But this has worked great for us for the last 2.5 years. Now, what the international plans are they are plans that are designed specifically for people who are going to spend an extensive amount of time out of the United States. And we knew we were going to do that, so that is why we leaned toward these plans. So we landed on the Blue Cross Blue Shield International Plan. It's very similar to what you are used to with a typical health insurance plan, but because it requires you to be out of the country for at least 3 months, their costs are lower, therefore they pass that savings on to you. So just as a broad example, what would have been a $2,000 a month plan ended up being a $900 a month plan for basically the same coverage. And yes, Paul's had a couple of claims in the United States just for regular routine stuff and a few minor things, and they were reimbursed just exactly the same. So it was no hassle. It was a piece of cake. We have not had any problems, but we have not made any claims outside of the country. However, they have a huge network that you can go through, and my anticipation would be it would be just as easy. There are other companies who do it as well. Cigna has one. My understanding on the Cigna one is that it requires you to be out of the country 6 months a year, and they cap how long they will pay for you to get care in the United States. So if you have some catastrophic event and you have to get care in the United States, they cut you off after 6 months. And that's pretty extreme, and it's a hard, hard line. So I would say for the Cigna plan, if you truly are going to become an expat and go live somewhere else, that's probably a good plan for you. But if not, I think I would point you to the Geo Blue plan. Now, there's another one called Expatriate. We also have experience with that. That one is great as well and is even a little bit cheaper, but your deductible is per occurrence instead of once per year. So, it all kind of balances out in the end. But again, that's also a very, very good plan. So if you are out there really looking for plans to help you with extended international travel, I highly recommend these international plans. Now, I do want to point out with the international plans compared to the more traditional private plans that you're going to get either in the marketplace or on the private market or your COBRA plan, the international plans do often, if not always, have some sort of pre-existing condition exclusion. What they usually do is they will exclude any pre-existing condition for 1 year. And then if you don't get treatment or advice or seek help for that condition, then they will cover it. Keep in mind, though, that means like if you are on a medication for, let's say, high blood pressure and you're getting it, even if you don't go see a doctor for that year and you are getting, that's considered treatment basically for your condition, they're going to continually exclude that. So if you have a medical condition where you are currently undergoing either you need medications or treatment, then probably those international plans will not work for you. When we signed up for it, I didn't even go to a doctor for 2 years because I didn't want anything out there where they could exclude it. And so now anything that I would need would not be excluded. But the more traditional plans that you're going to get in the United States do not have pre-existing exclusions. So that is a big difference. So pay attention to what your health needs are and see which one of those will fit. But there's still another option. Yes, I keep having all of these ideas. It is called Health Share. Now, this, I want to be clear, is not health insurance, and it is not regulated as health insurance. Therefore, it doesn't qualify to put money on that HSA card. So those are some really important caveats to know right from the beginning. Now, Health Share is very interesting. They're mostly religiously based, although not all. There are a couple of exceptions. So you have to sign something that says you align with their religious beliefs and you will abide by them. But it is basically people pool their money together to help other people in their community out. We did a health share plan several years ago when we were in between jobs, and it actually worked great. We signed the form honestly, and we went through it, and we did have a couple of fairly big claims, and they did pay. So it actually worked great. But what I will say is we had to pay out of pocket, and you have to negotiate your own cash rate with your physician or hospital or whatever it is. But they did reimburse us quite quickly. It was within 90 days. So it worked great for that. Here's where it's not going to be great. Again, pre-existing conditions. They will either exclude them straight up, or they will have like a 12-month wait period. If you don't have any treatment during that 12-month, then they will go ahead and cover. The disadvantage also is that there's no guarantee they're going to pay. There's no contract. They don't owe it to you. It really is, I guess, faith-based, and I don't mean that in a religious way. You do have to kind of just have faith that it's going to work for you. I would say if you're fairly healthy and don't have ongoing health conditions, I would certainly give that a try again. I think it worked really, really well. And one of the reasons it works well for people is the premiums typically are lower, just like the premiums of the international plans are also lower. So that's a good way to lower your premiums if those types of plans are going to work for you. Now let's move on to the next one, which is a little bit of a hybrid. It's called nomad insurance, and that is for people who are going to travel a fair amount. Now there are a few companies who do this. I think one is called Safety Wing, and it's kind of an intermediate, temporary kind of thing. It has limited coverage, but it will cover medically necessary events for you if you are out of the country. It is a lower premium, but the premiums tend to really spike the older you get. So if you're looking into those, ask them for the chart to see how much it's going to increase the next year and the next year and the next year, because it can get pretty steep pretty fast and offers kind of a limited intermediate coverage of healthcare. But again, it's an option. If you're just going to go out there for 1 year and do a gap year, or hey, I'm just going to try this out for a year, it might be a good choice for you. Now, as we continue on, again, right now we're talking about health insurance plan options for those who are not Medicare age yet. I do want to point out, this is not travel insurance. It is truly healthcare insurance. But I'm going to put travel insurance in here also because there are times, and that might be just exactly what you need. There are many insurance companies that offer travel insurance. You know, it's kind of a temporary thing. If you've planned your, hey, I just retired trip and it's a 2-month trip, then it could be a very good option for you. They will cover if something major happens to you. They're not going to cover your routine health care, but here is a very important caveat to those. If you're going to go the travel insurance route, it is very important that you sign up for it within 14 to 21 days of when you purchase your flight or your around the world cruise or whatever it is you're doing, because that will eliminate the pre-existing condition clause. So if you don't do that, then you have a pre-existing condition, then they won't pay for it. So important to pay attention to that if you are just going to use travel insurance. Another point on travel insurance is many credit cards, the premium travel cards. We Love American Express Platinum cards, the Chase Sapphire cards also offer travel insurance. That is very similar. So you might not even to do that if you're really only going to go on one trip or 2 big trips, something like that. You might want to consider travel insurance. Now, with a travel insurance, they do have something of an evacuation clause that will get you to a hospital if it's necessary, but almost always that clause is the nearest acceptable hospital. It isn't going to get you home. So if you really want to get back to the United States, if something major happened, I would advise that you do buy a separate evacuation policy. They're not very expensive when you think about the potential of how much it would cost to fly you back medically if it was necessary. I think the policies are about $500 per year for a medical evacuation policy. There are a few of the international policies I talked about earlier, the GeoBlue. Some of those may offer, if you buy the higher level, also the evacuation that gets you back to the United States. So again, be sure to look at that before you end up doubling up. So now let's get to Medicare, now that we've talked about all of the other options if you're not quite Medicare age. And quite honestly, the Medicare discussion is just not going to be very long because here's the truth. Medicare doesn't pay if you're out of the country. So if you want to do international travel, I do not recommend relying on Medicare. And here's the good news. That way you can't use it as an excuse to not do it because it doesn't matter anyway. So let me clarify that just a little bit. Medicare Plan A is what we all wait for. We're 65, we finally get Medicare, yay. Well, guess what? That only covers hospitals. So most people know by now, you also have to buy Medicare Plan B insurance. And this is that thing. When I mentioned in the beginning of the video, wow, I had some surprises about Medicare, I was really surprised by this. You have to buy Part B, or there is a very steep penalty. And I was shocked by this. So let's say, oh, I'm going to go live in Italy for 5 years when I hit Medicare age. And then you come back to the United States and you want to get your Plan B. Well, guess what? You are penalized for not having it when you became eligible for Medicare. So they penalize you 10% per year that you don't have it. So if you're gone 5 years, your premium then goes up 50% for life. And I am not kidding. It's for life. So if your Medicare Plan B baseline cost is $200 per month, and then you're out of the country 5 years, you get 10% per year, so 50% penalty. So when you come back, instead of paying $200 per month, you're going to pay $300 per month for the rest of your life. So here is my big tip. When you are eligible for Medicare, you darn well better get the Medicare Plan B, even if you're going to be out of the country for several years. So that is my advice. And then the other thing about Medicare is they do have riders that you can get. It's either Plan D, E, F, I can't quite remember, that does offer international healthcare coverage. However, it is very limited. It is if it's medically necessary. It does cap out at $50,000, not very much. So I would not ever rely on, yay, I'm finally Medicare age, I can quit my job and go travel the world. These really are two different animals. Medicare is for the United States. And if you're at all going to go travel the world, go international, no matter what, you're going to need one of those other options. So that is why I say waiting for Medicare to kick in is no longer an excuse for you. So I hope that helped clarify it a little bit. There's a lot to it, and it is very, very nuanced and very detailed. But those are the big bullet points that I think will help guide you in the right direction. I am always happy to try to answer some questions for you. So if you want, put it in the comments below. My name is Heather, and thank you for joining me on The Freedom Strategy, and I will see you next time.